Hey there, John Hively here today, May 17th, 2025. Oligarch news for you. Yesterday, Moody's, after the stock market closed, Moody's downgraded the U.S. credit rating from AAA to AA1. So that's an A, and a 1. Now, that doesn't mean a whole lot necessarily, except interest rates are likely to go up. There's a good chance that's going to happen. And interest rates for U.S. Treasury bonds, which are the U.S. debt, the U.S. issues bonds, and people buy the bonds and they get a little interest on the side, and they hold the bonds. And anyway, the interest to attract more buyers to buy those bonds, to buy that debt, the U.S. government is likely going to have to increase interest rates. Those interest rates on U.S. Treasury bond are tied to other interest rates, the ones that you pay. The, say, mortgage interest rates, credit card interest rates, auto loan interest rates, whatever you can think of, they're all tied together. So now the U.S. Moody said, basically, that it was downgrading the U.S. credit rating because the deficit was so high. Now, let's talk about the deficit and how that's going to impact you. And you already know it's probably going to result in a rise in interest rates. So let's go to that real quick. So this is an example, a bar chart. That's an example of how we get to deficit. So every year, the United States takes in so much tax revenue. And then it spends a lot of money. Now, in this case, you can see this bar is bigger than this bar. So you have to borrow this amount of money to match that, to match spending with to match spending. To be able to spend that money, you have to borrow some. So let's take a look down further so you can kind of get an understanding of this. So like if you have a deficit from one year of $150 billion and $75 billion from another year, and then you've got another $100 billion deficit, and then another $100 billion deficit, well, you have to add them all together, and that gives you the total debt or the total deficit throughout the history of the United States. And by the way, I think I'm right to proclaim the United States has always had a debt. Always had a debt. So, and we've been able to pay it off because we take the old debt and we simply buy a new bond when the old bond expires. I think I've explained that in a previous video. This is from the St. Louis Federal Reserve. It shows federal debt, total public debt. So this is where you add in every year, you add in the previous year's debt. So if you notice here, down here, this is like, let's get down to 1966, first quarter. The total debt was $321 billion. A lot of money back then. But then let's go up to a decade later. Oh, a decade later is brings us to quarter one. It's $600 billion. Quarter one, 1976. So it had increased by a third in 10 years. But then all of a sudden you go from 600,000, you go to 1986, and what do you get? It's tripled in 10 years. And then you go another 10 years. 1996. It hasn't quite doubled yet. I don't think it's doubled, but it's come close to doubling. And then you notice it gradually increases. And then what happens? The Great Recession hits, and there it is, the first quarter of 2008, it's $9 trillion. It's like it's like many times higher than in 1966, a mere 48 years earlier. So what do you notice about this graph? If you look, it jumps from about $9 trillion to over $36 trillion over here. Excuse me. Over here, right there. So the total U.S. debt is right now over $36 trillion. And Moody's is very worried about that. Interest rates are going to have to rise because that debt is tied to your mortgage, to your car payment, to your credit cards. And U.S. citizens right now have like massive credit card debt. So anticipate your credit card debt's going to rise. And there's a reason why this happened. And one of the reasons came about due to political corruption. Now, if you go back to 1966, down here, way down here, you probably can't even see it because it's so tiny. Down here, where my finger is. That there was political corruption there, but it was in 1976 that the Supreme Court began legalizing political corruption on behalf of their billionaire friends, bribers, and benefactors, because there was a lot of money to be made via the government. So what did the billionaires purchase along here that made this increase? Well, one thing is they purchased things like massive tax cuts for themselves. So naturally, the deficit rose. And then what else did they purchase? Oh, they purchased trade agreements, especially during the 90s. What happened to the trade agreements during the 90s, like NAFTA? Well, that exported NAFTA and other trade agreements, such as giving China free trade, first most favored nation status in the World Trade Organization, granting that under George W. Bush. Well, that meant that U.S. manufacturers were going to export millions of American jobs, that and NAFTA and other trade agreements. So when you export millions of American jobs, well, what's going to happen to the deficit? It's going to go up because you're taking away the tax base, because the billionaires are also buying ways to hide the money. Now, look, this is kind of long-winded of me to say, but when you export a job, say a job that pays $24 an hour, and you send it and somebody to China and somebody's now making, or Mexico, let's say Mexico, and somebody's making $3 an hour, that's a $21 an hour difference. Well, that money, the difference, most of it goes straight into the pockets of very wealthy shareholders. So that benefits the billionaires. But the billionaires were also purchasing a lot of other things, such as their own tax cuts, which I've covered, but also they were purchasing things like ways to hide their money overseas, like the Panama Free Trade Agreement, which one day we'll go into. So there's a lot of things going on that forced this deficit up. But it was basically when the Supreme Court ruled that spending cash in the political markets was legal, because they decided that spending cash was the equivalent of the words that come out of your mouth. That's what they said. The words that come out of your mouth was equal to the cash people spent in the political markets. It doesn't matter. George W. Bush, Bill Clinton, Barack Obama, that didn't really matter to them. They were all going to export your jobs. And they all did some sort of damage to do that. So it didn't matter whether you were right or left. It was the billionaires versus you, and you lost because they controlled the political markets with their cash, the billionaires did. So, look, you're going to pay more. But what if, here's a question for anyone. What would happen to society if all of a sudden the yearly deficit was eliminated? Well, such as, say, Medicare, Medicaid, cutting the military in half, cutting the subsidies for billions of dollars for the wealthy, for Exxon, for Elon Musk corporations. Well, if you cut those subsidies, you'd probably save a lot of money. If you cut the military in half, you're probably going to see big-time unemployment, although you could probably put that money to better use elsewhere. And then on top of that, you've got a society that seems to be, especially since the deficit has increased 400% in just 15 years, you've got a society that is in a recession, literally a Great Depression. And the only thing that's holding it up is that deficit spending. So that's what's going to happen, is there's going to be a collapse. And as Warren Buffett said just a few days ago, this type of deficit spending is unsustainable because it's not followed by any real growth. So let's see here. So the bond markets are reacting last week to this debt too, before Moody's even did the downgrade. So the bond markets are pushing interest rates up because a lot of people want to get rid of U.S. debt. Japan, China, a lot of other investors don't want to hold U.S. debt so much now that it's been downgraded. But even before the downgrade, Japan was unloading a lot of debt. And of course, to attract that debt, to attract buyers to that debt, they have to raise interest rates. The federal government does. So anyway, that's what's going on. And so just be aware, we have been in some sort of long-term depression for some time. And the one thing you should understand is there's a reason for this. And it's Supreme Court corruption that legalized corruption. And there is a very good study about this, about the results of this. So according to a RAND study that came out in 2018, and you could look at Google income inequality, RAND Corporation, $48 billion, trillion dollars was taken by the wealthy from the bottom to 90% of citizens from 1976, when the Supreme Court legalized corruption, and for their billionaire friends, bribers, and benefactors, and $48 trillion to 2017. But the study also mentioned that the United States, the billionaires within the United States were taking about $2.5 trillion every year and would continue to do so into the future, so that about $65 trillion have actually been taken from the 90% by the 1%. So the 1% has taken about $65 trillion. If the trajectory was correct by the authors, about $65 trillion has been taken from the bottom 90% since 1976 up through 2020. So what you really have is a massive income redistribution thing that has resulted in massive in a society that doesn't have the power to demand enough goods to sustain itself. So the demand simply isn't there. So in order to make up for that demand, you have to have a massive increase in the deficit to increase the demand for goods and services. And that's all that's why we probably are in some sort of recession now that requires spending going into that kind of debt. $36 trillion. And it's all because of Supreme Court make-believe. Anyway, you guys have a good one. I'm out of here.